Hey traders, Sam Shakespeare coming to you live. How's everyone doing? Welcome to the Trade Recovery Masterclass. Been chomping at the bit to get this thing to you guys. I'm excited that it's at a point now where we can release it in what I'm calling the beta stage because I need to get some real world testing. I've been testing it with me and tweaking it and testing it, and it looks good, but I need you guys to start using it. So this is the beta release. And I would say that at first, you guys don't stick this on your live account just yet. Play with it, learn it. Give us some time, at least a couple weeks, to make sure we got the bugs out of it. And then we'll go from there. We might have to make a few tweaks to be going forward. But if you're not a subscriber, check this out. I mean, thanks for coming because this is a really cool addition to the VTA. So for those guys that are not VTA Pro subscribers, the VTA is the virtual trading assistant, the TigerBots virtual trading assistant. It is basically an expert advisor that runs into your MetaTrader 4 platform that will scan the grids and alert you of high probability setups, but also goes a step further because if you accept those alerts, it will actually manage the trade for you. It'll look for places to get out of the trade, whether it be profit or a loss. So it will take care of the managers. Of course, it allows you to manage the trade on your own completely anyway. But that's kind of what the VTA is. Now, the VTA is a core unit, and it has a series of plugins. One is the trend bot that we have, the Tiger trend bot, which automates the trend trades. You also get a bonus setup with if you're a TrendBot plugin subscriber. You get an extra 5-minute stochastic and a 15-minute stochastic trends, which don't appear on the regular Pro. So, a couple benefits there, but this is the trade recovery module. For now, it's included in the deal. So basically, as a thank you guys for coming on board with us for the VTA project, we're not charging anything extra for this, yet I believe it adds a whole bunch of value. So without further ado, let's go ahead and get started. Now, by the way, guys, the VTA is just the alert system. It's not these grids that come on the MT4. So those are an additional add-on because it does make it a lot easier when you can have everything just on your MT4 platform. And not to mention that the MT4 grids, they will be right in line with your broker's prices. So I know if you guys are on the normal trade room and you see the projected grids and you're like, hey, the prices aren't exactly mine, because that's an aggregate feed. It won't be exactly corresponding to anyone's particular feed. But if you use the MT4 version of the grids, the prices you see will be your exact broker price feed. So that is a nice little advantage to that. If you've got yourself installed, bring it up on one of your charts, which all you should have to do is, if you have an empty chart, just find your TigerBots VTA Pro and just kind of drag it and drop it. Mine's already on there, so there's no need for me to do it now. Okay, thanks guys. So what we'll do then is bring up your expert advisors properties. Okay, you should see it's version 1.2. That should let you know you're in the right spot. Now, just because you have a great signal system that will give you a high win rate, high percentage win rate, it's really all about how you manage those trades to determine whether you're going to be successful or not. Because like I said, two traders can take the same identical entry. One trader can lose that trade and one trader can win that trade, but they took the same trade. So it's not all about the entries, right? So, a lot of it's about how you manage it and your exits as well. What I wanted to do was create something that would turn your losing trades into winning trades. That was the idea behind it. It's like, man, imagine if we could take losing trades and just turn them into winning trades. Well, that was the idea. Here's our trade recovery setting. This is a new section you will notice. Before I start about that, I want you to move up though to your max orders. I think the default is set to 10. Whatever you put this on, you're going to need more now, okay? Because a trade recovery can enter, up to 8 to 9 extra trades for your one individual trade. So even though they counteract each other, and so you're not building up a lot of margin against you, it still will count as individual trades. So you want to bump that up. Now with the trade recovery, I might even take it out of there because it's kind of irrelevant now. But for now, I would bump it up to maybe 20, 30. All right, let's get back down to your trade recovery. Now, the first one, use trade recovery. That just activates it. You don't have to use the trade recovery. Okay, in fact, default it comes false, I'm pretty sure. So you're going to want to set that to true if you want this thing to recover your trades. All right. The second thing you'll see is slingshot mode. I'll talk about that. At first, though, keep it false. All right. Let's just keep it false for now. All right, because I'll talk about what that does in a minute. You don't need it. The trade recovery does not need slingshot mode. Is an extra feature that I thought was more kind of fun than anything. And it can really work out to some good pips, but it can also hurt you in the long run if you're not careful. It's kind of like scaling out of your trade recovery. Okay, we'll talk more about what that slingshot mode is. Okay, now here's the trigger and target and multiplier. These are your three tweakable things here, and I think you're going to find a comfortable area and kind of leave it, but at the same time, individual trades might require different little tweaks here. But your trigger is your trade recovery trigger. That's where your trade recovery kicks in. Think of it as your stop loss. This is where your normal stop loss would be. Okay, so if you normally keep a 15 to 20 pip stop, then put your trade recovery trigger wherever that stop is. I wouldn't go too close like a 15. I'd keep it around 20 or more. I think 25 is good. Okay, but just keep in mind, the bigger this is, the bigger your target zone has to be. The bigger your target has to be. Now it has to be, you want it to be at least 2 to 1. Okay, you want it to be at least 2 to 1, and I would add a couple pips, like 5 pips. So if you got 25, put 50 and add 5, make it 55 pips. So granted, remember that 0 is there because of 5-digit brokers. That's really 25 pips. That's 55 pips. All right, and then your multiplier, I'll explain what that is. Just as a quick little reference guide, 1.5 is conservative, 1.7 is aggressive. In fact, I wouldn't even recommend doing a 1.7. It's that aggressive. 1.6 is in the middle of the road, but honestly, it may be too aggressive for some. So I think most of you guys will be in the 1.5 to 1.6 multiple. I'll explain what that is. Just keep in mind, 1.5 is a little more conservative, and 1.6 is a little more aggressive. And basically, it determines, you need a little. If you want a more profitable trade, for 1.5, you're gonna need. If you have 1.5, you may even want to stretch this out to 2 plus 10 pips. Make this an extra 10 pips over the 2.1. Here is kind of a layout of what your zones will look like. Okay, so imagine here that your entry is at 50 and you went long. Okay, I'm going to use simple math here, guys, just to illustrate a point. I'm not even going to use a whole bunch of math. I just want to illustrate a point here. Okay, so normally here's your long entry right at this dotted line. We'll call this dotted line 50. All right, if you go long at 50 here, we're just going to say your stop is at 25 and your target's at 100. That's a 2 to 1 risk to reward. Okay, so if this is just a normal trade, forget all this writing over here. Just a normal trade, you bought at 50, you're looking to get to 100, and you'll stop out if it gets below 25. Here's what happens with the trade recovery. If you move up to 100, you move up anywhere and you take your points, great. That's what you want. But if this thing falls down to 25, we'll just say you're one lot long on here. I don't think I have any drawing tools, do I? I don't. All right, so we're just going to leave it this. We're going to go long with a lot here. So if we go to one lot up to 100, we just made 50 pips, right? Okay. Well, say we go down to 25. Normally you would stop out, you'd take your minus 25, but that's not what we're going to do any longer. For easy math, we're going to call our multiple just a 2.0, okay? We're going to open opposite some trades that are heavier than this initial trade. So you opened one long here. Just for example, we're going to say we'll open 2 lots short on at 25. All right, so now we're short 2 lots, we're long 1 lot, we're open both, okay? And but you're net short 1 lot short because you got 2 short, 1 long. Net wise, you're 1 short. Okay, so of course you're minus 25 on 1 lot and you're break even on 2. So if this, now just in the easiest scenario, this thing goes right straight to the new target at 75 below the 100. There's 25, there's the 100, then there's the 75 below. So that's 50 pips. Now you've got 2 pips at plus 50, that's 100. And you've got 1 lot, so 2 lots at plus 50, that's 2 lots at plus 50, that's 100 pips. one lot is minus this 25 plus minus another 50, minus 75. So if you do the math, two lots plus 50, that's 100. One lot minus 75, that's minus 75. That's a net plus 25 pips. All right, so on the most basic level, you see how this works, right? You go lose, it opens heavy, and it goes down, and it takes you out for positive. All right, now, say for example, you've opened these new lots, and now you're net one lot short, but you don't hit the target. You maybe float here, you maybe come negative a little bit, you come here. But guess what? Now you hit this stop. This 25 short you've put on has a stop loss of this 50, which is a 25 pip stop and a 50 pip target. So every trade that will open, you can see, will have that same stop and target. All right. So as long as it stays under this target, it will keep your current position one long, two short, net one lot short. All right. If this one technically, quote, stops out, in other words, goes back above the 50 line, back above your original entry line, it will now open a new position long that is more than the net one lot short. So it'll make you net lot long. All right. So maybe it'll be 3 lots, maybe it'll be 2. It'll be based on that multiplier. It'll open a position size that's a little bit larger to make you net lots long. So basically the idea is the price will eventually break outside of this range. When it does, you will be weighted in that direction. So whenever it breaks out of that range, you will end up positive. All right, that's trade recovery in a nutshell. You go long, maybe it makes it here, maybe it doesn't, it opens short. If it doesn't hit the target, it'll open long, it'll open short, then maybe finally it opens long, you're net long, boom, it breaks out. You exit with positive. All right, that's how it works. It's pretty basic. Okay, now you can probably already see where the Achilles heel comes in. What if it just does this forever? Okay, that is the Achilles heel. If that builds up forever, it'll eventually build up so many trades that it will, just the commissions themselves and the spreads themselves will margin call you, believe it or not. That's where we need to put a limit on it. Now, this multiplier here, good Tracy, thank you. This multiplier here decides how big each of these lot sizes are that open. But notice I put in a max recovery trades in here. Okay, this is, it's 12 high. It's actually high right now. If you're using a 1.6 multiplier and your initial trade needs to be appropriately weighted, okay? But you're probably not going to get more than 8 to 9 recovery trades. If you're using a 1.6, and you'll see this as you work this out on demo. You know, you'll see exactly the sizes of lots they will open. Okay, 1.6, you probably won't be able to get more than about 8 recovery trades on there, maybe 9. Okay, and it all depends on how big that first lot size is. You'll see how this works once you throw it on your demo account. All right, so basically what's going to happen is, you know, you're going to have your recovery trades. So the Achilles heel situation is if this thing ranges so much that it opens the maximum amount of recovery trades, then what will happen is if that last recovery trade stops out, it will stop you out, the whole thing. And the loss will be substantial. And the loss will be directly proportional to how many recovery trades you allow to open. So your account may be able to be handled 10, 11, but I'm going to tell you right now, you probably don't want to go more than 6 or 7 or 8. And okay, yeah, then the stop out would be this thing here. That's a good question. It's a very good question. Okay, so basically these dotted lines are your stop out. So here's your first trade, 50. Your stop out is 25. So if it hits 25, it initiates a new trade recovery. All right, say you've got a max of 8 recovery trades, and you've got, here's original trade, trade recovery 1, it ranges. Boom, trade recovery 2, it ranges. Boom, trade recovery 3 opens, but it doesn't hit, it ranges. 4, 5, 6. All right, now you've opened your maximum number of recovery trades. but this one doesn't hit the target zone. Sure enough, it comes and hits here. Instead of opening a new recovery trade at this point, it'll close all of them. It'll consider the trade recovery having failed that time. Exactly. All right, so that's basically what'll happen in a trade. It won't happen often, and the more you allow, the less times this will happen. But when it does happen, the hit will be bigger. So you may find the trade-off still worth it. But what you don't want to happen is that it opens so many of them that it actually margin calls you. So that's how a trade recovery fails. Okay, I have introduced a feature called wiggle mode. I call it wiggle mode. I might change the name of it. I don't know. I just couldn't. I'm not very creative when it comes to naming the features. All right, so wiggle mode is what it is. All right, now I'm going to get into wiggle mode if we kind of basically understand just the gist of trade recovery. As long as you break out, and 95% of your trade recoveries will break out, depending on how many trade recoveries you give it. I'm saying within 8 to 10 recovery trades, 95% will break out. Okay. Now, for the ones that don't, you start to worry once you start building up 7, 8 recovery trades. You start thinking, oh man, here we go. Is this going to be one of them? I hope not. But I've introduced what I call wiggle mode. Okay. Now, I want to explain something to you really quick. Whenever the trade, and there could be a multiple, but whenever price, you're in a recovery trade, which means you could have anywhere from 1, 2, 3 to 5 or 6 trades open going in opposite directions. All your long entries here, all your short entries here. While price is in between, everything's going to be negative. Everything. Think about it. Your longs will be negative because you're under them, and your shorts will be negative, so you're over them. Okay, you're inside the trade recovery zone. All trades will appear negative, and it'll build up a little bit of a drawdown on your account. But you know, just like I said, as soon as it breaks out of this little bit, one side of the trades will be positive and one side will be negative. And as the closer you move to the target, the more that negative will get closer to positive. And if you've got enough trade recovery zones, there'll be an area before it even hits that it turns break even and into positive and whatnot. So, and down here, the same thing. Once it breaks out, all your shorts turn positive, your longs turn more negative, and your shorts get more positive. But remember, you're net short, so overall you're getting closer to the break even and eventually into positive territory, closer to this line here. So breaking out is the key. Now, I wanted to give you some control over what happens, because there's nothing worse than just looking at a trade recovery and yes, they're doing great, but now you've hit one of those trades that just wants to range within your recovery zone, and it's building up recovery trades, and you're starting to panic, and you just wish there was something you could do except watch it. Well, there is. All right. I've introduced what I call wiggle zone. Now, there are some strict kind of rules, but important. Okay. And that is, you can only remove the most recent trade recovery trade that's been implemented. All right, actually, I have a 15-minute L1, L7 short that the VTA entered, okay, while we've been talking here. All right, I'm going to see it's -4. Just to see how it works, I'm going to change the trade recovering settings. Let's do a 10 pip for now. In fact, I don't do it this ever, legitimately. I'm just hoping it triggers something. And let's just put a target here of 20 for now. I don't want it to really hit the target. Okay, let's hit OK. All right, maybe we'll get this to open a recovery trade while we're talking, okay? But what will happen is when these open recovery trades, they'll tell you the recovery. It'll say, okay, here's your 15-minute L1, L7. The first recovery trades that open will say recovery trade 1. And then if another one opens, it'll say recovery trade 2, recovery trade 3, recovery trade 4. So you know what number you're on. All right, so if you want to use wiggle mode and say take off one of your most recent trade if it's in positive, then you can do it, but you can only take the highest number recovery trade. That's the only one you can take. You can't take anything else. If you're on recovery trade 8, you cannot take off recovery trade 7 or 6 or 5 or your original trade. You cannot touch once something's in recovery trade, the general rule is don't touch it. Okay, you got to let it do its thing. And that's one reason too why you really want to have a VPS if you can, guys. You don't want your computer shutting down in the middle of a recovery. So VPSs are kind of a little more important when you're going to use these. You can do a lower multiple will give you more opportunities, more trade opportunities. you know, quickly, and not to change the subject, but for an example, you remember I told you if you started with one mini lot, which is 0.1 lots, and you opened 8 recovery trades, on your 8th recovery trade with a 1.6 multiple, it's opening 2.67 lots, which, by the way, you're not net that position. That's just what the opening of the trade is. You'll only be net, I believe, less than a full lot. But if that multiple was 1.5, then that 8th recovery trade is only opening 1.5 lots. So you're only going to be net like 0.3 or 0.4 in the direction. So 1.5 gives you a lot more chance to not hit that Achilles heel. And I think a conservative trader would rather be in that 1.5 multiple. But if you do the straight 2-to-1 risk reward, your recovery trades are not gonna, they're gonna be a little losers still. So you got to add a few pips to that 2-to-1. So if you do a 20 pip trigger zone, then you're going to want to do a 40 to 45, really 45 to 50 pip target zone if you're using a 1.5 multiple. Okay. But back to this wiggle mode. You can take off the most recent. Now, this is not something you just want to do. Hey, you've got 3 recovery trades open. I'm just going to take one off in wiggle mode. You don't want to do that, okay? Because I'll tell you why. There's risks associated with wiggle mode. You want your first case, best case scenario after you've entered trade recovery. Your best case scenario is that it completes the trade recovery successfully, just the way it's supposed to do it. Wiggle mode is an emergency stopgap measure. Okay, it's emergency. Okay, but there are some risks, and I'm going to show you how to use it right now. And like I said, I don't want you using it at first because you got to get used to it. But I can tell you, it really does help. Here we go. We just opened a recovery trade. You can see it to your scroll to the right. It went -6. Okay, that's where I said it. You'll never see it this tight. Okay, you don't want to, because a spread can tag you on both sides. So if this thing goes -6, it'll keep opening recovery trade. We might see a bunch of recovery trades. But that's okay. That's what I want to happen while we're talking. All right. So if I go to my experts tab, you can see what happens. You can see everything here. Okay, now you might get a little more information than you need because I'm still doing some testing on it, and I like to see a lot of prints. In the upcoming little minor releases, when I make some tweaks, I'll clean up this little experts tab to make it more user friendly for you guys. But you can see it gives you a couple of prints, like the euro dollar we entered, and then you can see where it activated trade recovery here. You can see it entered with 0.11 lots, and now look how much it entered here. Okay, it entered 0.18 lots as a buy now. But notice we're only 0.07 lots net long. So our margin will only reflect that difference. So you can see you'll have like 8 trades open, one with 3 lots, one with 2 lots, one with 1.5 lots, but you still got all your margin left. You're like, yeah, that's pretty nuts. So we'll keep an eye on this, and then I'm going to hopefully use wiggle mode. You would never use wiggle mode at this point with one recovery trade. You just would not do it. Okay. In fact, I don't even know if I can actually use wiggle mode on this because I made the trigger so tight at 6 pips. But yeah, you do have it. It's on there, Matthew. I put it on. I wasn't going to, but yes, you have wiggle mode. Wiggle mode is something that you cannot activate or deactivate. Okay. Because let me put it this way. You activate it by exiting your final recovery trade at some point in the positive territory. That's how you activate it. Because if you didn't have wiggle mode and you did that, you'd have real problems. So you never want to exit a recovery trade on your own. You never do, unless you're purposely using wiggle mode. All right, so if you're not using wiggle mode, the rule of thumb is don't touch a recovery trade. Let it work itself out. Okay? So it's in there. It's built in. So if you happen to exit your final trade recovery, it will kick in recovery mode. Except do not do it on recovery trade 1. I can't stress that enough. You shouldn't be. It's only emergency. It shouldn't be until 4, 5, 6, until you're getting worried. That's the only time you really want to use wiggle mode. Now let me show you what wiggle mode does. Keep in mind, you notice this lot was a little heavier. The next one, I'll tell you real quick what it's gonna. I'll tell you the order of 0.11. what it will open at a 1.6 multiple. But it's about a 1.8 next, okay, and then after this it'll actually do another 1.8. The first two, it's weird, are actually identical size. And then it'll go to 0.28, and then from 0.28 to about a 0.46, and then after that about a 0.74, and then after that it'll be up at 1.18 or 1.15, something like that. It alternates, and within 5 or 6 trades you'll be opening over 1 lot position sizes, but your net lot positions won't increase that much. So what I'm trying to point at is that, say you get up to recovery trade 6, okay, and you may only be net lots, you know, 0.8 or whatever, but that individual trade is like a 2-lot trade or 3-lot trade even. All right, now let me go back to the picture. Okay, here's our recovery zone. Here's all our long entries at this dotted line. Here's all our short entries at this dotted line. Now say our most recent trade recovery was a long. Say it was number 7. Okay, and now we're up here in our target zone. We haven't touched, so the trade recovery is not complete, but we're in the positive for our longs. Our shorts are negative, and we're near our maximum recoveries that we would allow. So we've got this, and maybe our recovery zone is 50 pips long, but we've got this 3-lot trade that's up 35. I mean, all of our long trades are up 35, but you can't take all your long trades off. If you did that, all the margin from all these short trades, which is several lots, would immediately margin call you. You can't do it. You can't just take off all the winning trades. That's how you kill your account. You have to unwind. If you're ever going to unwind a trade recovery, you have to do it 1 trade at a time, a long then a short. So you basically have to take a long off, and then you have to wait until it goes short into a positive area where you want to take a short trade off, and then you got to wait again if you do that until it comes long again. So you can only unwind a recovery the same way they went on. You have to do it 1 off at a time. So if you do wiggle mode, what you can do is you can take your final trade off. So say you've got this 3-lot trade or 2-lot trade, it's up 30 pips. You can take that trade off and just banked 2 lots times 30 pips. That's 60 pips on 1 full lot. But remember, you only opened with 0.1 lots. So this 60 pips on 1 lot is a lot more than your 60 pips on 0.1 lot. In fact, all you were probably trying for is 20 pips on 0.1 lot to get your growth for that day. But this 1 trade can give you 60 pips on 100 times more the position, if you're following my drift. Okay? Now, here's what happens with that. When that happens, you have to understand how that works. So what happens is there's some risk. Say you're plus 30 and you take this final trade off at plus 30, and you've banked that 60 pips. That's 600 bucks, right? 2 lots at 30 pips. All right, and you bank that in your account. But don't be fooled. You haven't really made that money, because guess what? I mean, your balance is still what it was. Okay, and your immediate risk, what you think about is, if this thing would have gone all the way up, well, you just missed out on those pips that it goes up, and you just missed out on that trade recovery. Okay, but the reason you're doing it is because it's built up so many trades. That's telling you what? It's telling you that you're in a range. So you're just still playing this range. So once it gets up to the top of that range, you see it hasn't broken above this top of this range. I'm going to take my last recovery trade off here. And what that does is it puts it in wiggle mode. It will, if it stays in the range and it floats back into the recovery zone, it'll reinstate trade recovery. So if it goes back above again, it'll re-enter that trade, and now you're exactly where you were, but you've banked 600 pips. I want to stop right there and make sure you understand that part. Of course, this is the best case scenario. Are you with me on that explanation? If you've got all these positive trades up here and all these negative trades here, granted, overall you're still negative probably. Okay, but all these long trades are positive, and we know that the most recent trades are real heavy in lot size. Okay, now again, to repeat, our net position isn't overall very heavy, but this last lot thing is heavy. So it's a way to bank a big pip total if you're trapped in a range here, and you can, and then if it falls back in the recovery zone, it reignites it. So if it goes back up, it re-enters that trade for you. These won't always work, but when they do, they work fantastic. Okay, here's the couple things that can happen. Say we've done that, we've entered wiggle mode up here, okay, and say in this case, well, let's quickly go over the case that it shoots up. If it shoots up, it would have worked. You kind of just, you know how when you get out of a trade too early, that's what happens here. You get out of a trade too early, but honestly, because you got out of that big trade too early, it's possible that the whole recovery could also result in an overall loss. Okay, so just remember that. I mean, it's not foolproof. All this is, I'm just giving you a way to have some control. With this way, you can actually build up a technique, okay, and get good at it. All right, and I'm going to be doing that with you. We'll all be doing it together. All right, so I've been already doing this, and I've been getting good results with it. So I think it's something we can all learn without too much of a problem. So that case is, you know, okay, it would have worked had you just left it well enough alone. It would have worked. Oh well, that's that risk. Oh, and by the way, that risk is increased by how far close to this entry you exit. If you exit that final one plus 2 or 3, you're not really helping yourself much. But the higher up in profit you get it, the better you protect yourself, and the more you minimize this risk. Let's say you enter the wiggle mode and then it drops back into recovery zone. All right, this is what you want. This is a successful, if you've done wiggle mode right, all you want after exiting wiggle mode, you don't even want the trade recovery to complete. You almost want it to get back in here. All right, because if it gets back in here, now you're safe again. Now here's what happens. If it gets back in here, it's got to get back in by 5 pips. So it won't just do it automatically, because I want it to give an opportunity to get back in the recovery zone and maybe not even get back up and trigger that again and trigger another recovery. Wouldn't it be great if it came back in and then it went down and this one went positive? Now you could even do wiggle mode on this one and start cashing each one out positive, very large lot sizes, cashing them out positive, and unwind it in a negative way. All right, the idea of wiggle mode is just to give you some room. Just wiggle a little bit to give you some room to breathe. So if you get one successful, maybe just leave it alone. You've given yourself an extra attempt for this thing to break out. But if it does go to the bottom and you get another substantial something here, maybe you just want to take that too, because you've already banked a good amount. If you bank this new good amount, the rest of the lot sizes are relatively small compared to what you just banked. Any questions so far about wiggle mode? I know it's kind of abstract idea, but I just want to get this to you so you can kind of start playing with it. I see Matthew got a question here. As with the whole VTA, I've left a lot of it up to your kind of tolerance for what we're doing. Not everyone trades big trades. Most people like small scalps, and they don't want to be in a, if you think of it this way, if you put a 30 pip trigger with a 60 pip target zone, you know, it's got to move 90 pips to get out of your zone. So you could be in that trade for that recovery zone. That recovery trade could take a few days to get out of, which means that currency pair is done for you trading. You can't trade. You keep that in mind too. Is another reason why you want to avoid recovery zone, is because it could tie up your currency pair for a couple days. It could. Usually they come out pretty quick, within a day or so, but it could tie it up. So. And you don't want a bunch of tied up recovery trades. You don't want a euro dollar one, a dollar yen, a euro yen. You don't want 4 currency pairs tied up in recovery. So that's how it works. All right, there's some things I wanted to discuss. Let me know if you got any questions. Go ahead, start throwing them in there, because we're going to wrap it up soon. Because most of this is going to come from you guys just using it and then talking about it. But let's see, a couple things I want to mention. First, once a recovery trade is in recovery, let it be. All right, we've got 2 recovery trades open. Let it be. Don't even mess with it. You know how many recovery trades. Your max recovery trades is the number here. So if you allow 8 recovery trades, that means 8 recovery trades. It means 9 total trades. 1 trade and your 8th recovery trade. It will allow your 8th recovery trade. If you have a maximum recovery trade set to 8, in this case, it's set to 12. If you have it set to 12, it'll allow a recovery trade number 12. But if that recovery trade goes negative, your trigger, in this case 6, but you know, it'll be a normal. It'll be like 25 or 20 that you'll set it at. Default is 25. So if that final recovery trade, which is number 12, which is the number of this max recovery trades that you've set, if that final trade hits the negative of the trigger, think of the trigger as the stop loss, then that will be considered a failed recovery trade. I just remembered there was something else we got to talk about real quick. All right, that's what you don't want. So the smaller you make this number, the more chances of that happening, but also the less damage that it will do when it does happen. And you'll have to play with that to see what I'm talking about. As far as your power of 20 pips a day real quick, I would set that as the smallest setting. I would say 20 pips equals 1%. I would get that small for now until you see how how big the trades are gonna open up. All right, and then I also want feedback, guys. I mean, when you use it, I would definitely want feedback. That's how we're gonna tweak this thing and grow it. Okay, we didn't talk about slingshot mode real quick. I think that might be too tight, Chris, but that brings me to my first point, is this is really only to be used on tight spread currencies, so the majors. I know, Matt, you know, I know you love pound New Zealand and these types of currency pairs. Don't do it. All right, it's a sure way to get those recovery trades built up too quick. I'm telling you, the small spread is your friend. Euro dollar, dollar yen. Okay, all right. Dollar yen, pound dollar even gets a little tricky. I mean, you don't want anything above a really 3 spread. You know, your really tight spread currencies you really need with this. I recommend with the majors. Yeah, when you're starting out, I would say a 20 minimum. And then if you do a 20, use a 45 pip target zone. Obviously, once a currency pair is in recovery, you don't want to do anything else with it. If you're something, by the way, it will do. The trade recovery will pick up all VTA trades, but guess what? We were talking about the VTA picking up manual trades. The trade recovery will pick up your manual trades too. You're welcome, guys. So you can actually take a manual trade on the VTA. If your recovery is active, it will pick that up. Right? So I just thought that would be a cool little added little touch. All right. Technically, you could actually use this as a trade recovery bot if you deactivated the VTA portion of it, and you know, just deactivate all these signals so you didn't get any alerts. You could just use this as a trade recovery bot and just take your own trades. I mean, any trade that you take, that's right. That means any trade. Another thing, I want to show you a trick, guys, that you want to do when you're using trade recovery. Let me just open up another currency pair real quick. Anything, it doesn't even have to be right. I'm just going to open a trade on dollar yen. Okay, let me open a trade on cable. Okay, now these won't mix up because of the time I ordered them in, but you're going to want to keep, you know how people, you usually have them organized according to time? You don't. You want to organize everything according to symbol. Okay, it's important. You want to organize it according to symbol, and it will organize your recovery trades. They'll line them right up, right under the trade that they're supposed to go with, and then all of your, if you have recovery trades on multiple currency pairs, you can handle recovery trades on more than maybe 2 or 3 currency pairs. I wouldn't go more than that. You know, you can have several going, but if they start building up, again, avoid going into trade recovery if you don't have to. There is an advantage, however, if you build up a lot of trade recovery trades and you get up to trade recovery 7 or 8, and that one is successful and it succeeds, you'll get a big gain. You'll gain like 5, 8, 10% on a trade. Quickly, it's pretty much everything, but I do want to talk about slingshot mode real quick. If there's no questions yet about what we've talked about. All right, so I'm going to talk about slingshot mode real quick. If you want to activate slingshot mode, don't do it right off the bat, because I want you to see what this does all on its own. Okay, but I did include this because it's kind of like a little fun thing I thought would be fun. Slingshot mode. If you have it set to true, what will happen is once your trade recovery works, it only matters after a successful trade recovery. Once you have a successful trade recovery, what slingshot mode does, say your original trade was 0.1. and it's open 3 or 4 or 5 or 6 trades, so it's open 0.1, 0.2, 0.5, 1.2, and it's got all these trades open. What slingshot trade does is once you've hit your target, it leaves one of those trades open with a 5 pip trailing stop. Okay, so basically it'll leave, say your original trade was 0.1, but this works, it may leave a 0.4 open or a half a lot position open with a 5 pip trailing stop to try to allow you to make some more pips. All right, but keep in mind that comes with risk, because if this hits the target and it opens a 0.4 and it leaves that 0.4 trade with a 5 pip trailing stop, guess what? You're not getting all those points right off the bat. If it falls right back, you've lost 5 of those pips on a heavy position. It might make the overall recovery go a little negative. Okay, so keep that in mind. But if it works and that thing takes off on you, you could add another 10, 20 pips onto your trade at a higher lot size than you would normally trade. So again, it leaves an opportunity to make more pips, but just like leaving half, just like scaling out of position and putting a stop to break even, you know how you have risk associated with that thing you left open. Sometimes it doesn't work out. That's the same kind of dynamic what I'm talking about here. Now you can see the trade recovery is working here. The original in the trade recovery zone is positive. See, and then the ones, so you can see that these two, it's in the target zone a little bit on the sell side. So if we look at that again, you can see right now that it's just under that a little bit. It's in the target zone on the sell side, just a touch, just about 2 pips. You can, and that is another good reminder. All right, say I want to talk about one little strategy point here. Okay, guys, say for example, let's look at this euro-dollar chart. There's a perfect example, actually. Perfect example right here. All right. Say, for example, this is, in fact, this was a trade recovery. It did finally work its, oh no, this is the one we're in. This is the one we're in. Look, it's working itself out just fine, by the way. Here, let me pull this up so you can see. This is the trade recovery trade. You can see once it gets to plus 20, it'll work itself out. But anyway, okay. Say though this move didn't happen and it kept ranging and opening. See here, it opened recovery, then it opened recovery, then it opened recovery, and didn't quite get close enough to open one there. But if you see that it's ranging and you see that it keeps opening recovery trades and not going any further, you can, in the middle of it, say you've opened 2 or 3 and you're like, well shoot, I don't want it to keep opening recovery zones, but it's opening really close to my level. Like I don't want it to keep opening if it doesn't have to. You can take this. You can't drag and modify like it says, okay? Actually, it's not showing you that. It showed that on my screen, but it didn't project it. Okay. You can't really do anything with that line, but what you can do is, if it's triggering right at minus 20, you can go into your expert properties, and in the middle of the trade, if you want, you can go ahead and change the trigger to just outside that. So if it's triggering at 20, just move it out to like 22 pips. Just move it outside the range so it doesn't trigger the recovery every time. All right, what else do I want to tell you guys? I was hoping that one of these would go into recovery, so keep this symbol, keep it sorted by symbol. Let me just go to profit real quick and see if we can see if this is above. I don't think it's above. No, it's not yet. Okay. But you can see as this gets more and more positive, that eventually they'll overtake this one together. All right, any questions about trade recovery? Yeah, but anyway, you guys, look, have a good weekend. Play with this over the next week. I want your feedback. If you guys can give me some feedback, I'd love it. Yeah, go play, guys. All right, that's it for me then. We'll see everyone on Monday. You guys trade safe and have a great weekend, guys. All right, catch you later.